The Chancellor is in a bind. UK borrowing costs are rising fast, markets are getting twitchy, and Labour is edging towards a crisis. Last week, I reported that UK borrowing costs had hit the highest since the financial crisis. It's actually worse. 30-year gilt yields have now climbed to their highest since the early 1990s. That's more than 3 decades ago. This isn't just a technical blip. It matters. The higher gilt yields go, the more the nation spends on debt interest. We already blow £9 billion a month just servicing our huge national debt. That's money straight down the drain. Please subscribe my channel for updated financial and tax-related matters. Also be updated with current UK tax changes as we have a lot related to your financial needs. Investors are losing faith in Labour. The bond market is now demanding a premium to lend to us, and it's hard to blame them. Reeves has already borrowed £50 billion more than planned since the election. She made a token effort to cut spending, but Starmer is forcing her to revive the winter fuel payment cut, review disability cuts and possibly even scrap the 2-child benefit cap. All of which will cost billions that she doesn't have. Despite hiking taxes by £40 billion in her budget, Reeves has left herself with less than £10 billion of fiscal headroom. Even the smallest wobble in growth, productivity or interest rates can knock her off course. And it's already happening. Borrowing hit a thunderous £20.2 billion in April, some £2.3 billion more than forecast. The bond market is getting nervous. Respected financial industry newspaper Morning Star reports growing alarm among investors. They're the ones we turn to when we need to borrow, and they don't like what they see. Long-term gilt yields are climbing fast. The 30-year yield has surged past 5.4%, up 72 basis points in a year. That's a steep move, and a clear signal investors are reassessing the risk of lending to the UK. They're edging up as I write this. Bond yields are rising elsewhere, notably in the US, where President Donald Trump plans Liz Truss-style unfunded tax cuts, which will add trillions to the mighty US debt mountain. But ours are still higher. Neil Mater at Blue Bay Asset Management says it's now very unlikely Reeves will meet her own rules, accusing the government of abandoning any pretense of fiscal credibility. Gordon Shannon at 24 Asset Management warned, "The government cannot talk its way out of problems it has spent its way into. Nor am I convinced that it can tax its way out." Even the IMF has weighed in, effectively telling Reeves to rein it back. It said in a report, "There is limited space to finance this spending through extra borrowing, given high debt and elevated borrowing costs." It's like the 1970s again, with the IMF telling us what we can and cannot do. Reeves now faces 2 bad options. Raise taxes again, which would further choke growth and drive talent abroad. Or cut spending, which would stoke a party rebellion. The third is to rewrite her own fiscal rules, which she previously called non-negotiable, and look very silly. The Chancellor is playing a tight fiscal game and is now cornered. Every tick higher in bond yields turns the screw. Soon, it may be too tight for her to breathe. Thanks for tuning in. If you found this video valuable, smash that subscribe button and turn on notifications so you never miss out on top-tier content. Your thoughts matter, drop a comment below and let's keep the conversation alive. See you in the next one.